Talk about the connection between stakeholders and business. Okay, for stakeholders are what? They are those people that whatever decision the business takes affects them. These are stakeholders. I think that is clear. Did I start the video already? Did I start?
Yes, sir.
Okay. I'm just going to start again. Stakeholders, we said stakeholders are those people who have connection with the business. So whatever decision the business takes, it affects them directly or indirectly. So examples of stakeholders are the owners of the business. For the owners of the business, they are interested in the profitability of the business. So what are we trying to say here? Because they are the owners of the business, they put so much money into the business. Why would they have put so much money into the business? They did that because they believe there's going to be a return on their investment. They believe there should be what? Return on their investment. That is profit. So if profit is not certain, then there's no point starting or putting money into the business. So for owners of the business, they want to be sure that the money they put into the business is secure and the business is returning profits to them. For government, they want to be sure that the legal procedures are done rightly, that the business is not involving in illegal things. And when it comes to profits, whenever they have to pay tax based on the profit the business has declared. Do we get it? So you wouldn't say you made profit of 10,000 so that the business will charge you, so that government will charge you 5%, and you made a profit of 20,000. So you have cheated the government. The government wants to be sure that the profit that you declared reflects on the taxes you are paying. Do you get it?
Yes, sir.
Customers. We are the customers. We buy, right? What is our interest? We want to be sure that whenever we go to the business, whenever we go to the shop or to our suppliers, we can get those products available. And we want them as quality, as a better quality, and the price that is affordable for us. I think that is clear. Clear, right?
Yes, sir.
Suppliers. Who are the suppliers? Those that give to the business, right? What do they want to be sure of? They want to be sure that whenever they sell to you on credit, you are able to pay back when it is due for you to pay back. And you have credit worthiness. Do you get suppliers here? Sometimes suppliers will sell to the business on credit. That means you have to pay at a later date by giving you an invoice. So they want to be sure that whenever the invoice has been given to you, you pay back your invoice when it is due to pay. Competitors. Who are your competitors? Your rivals. What do they do? Why do they need? What connection do you have with them? They want to measure your performance of the business. They want to see your financial position. If it is better than theirs or theirs is better than yours. Do you understand?
Yes,
they want to know if you are doing well than them. So they can only know this through your financial statements. Providers of external finance. Maybe you need a loan from the bank. When you need a loan from the bank or when you need a loan from financial institutions, they cannot just give you a loan. They want to be sure that you are not a high risk. High risk means that you might not be able to pay back. So they want to be sure that whenever they give you a loan, you will be able to pay back and with interest.
Master, how do they know that?
With your collateral, you need to give them security. Maybe you need a loan of 10,000. You now have to give them something worth of 40,000 or 30,000. So if you don't pay back, they can take it and pay. They can sell it to get your money back. So they're going to know. They will level you. Yes. They will measure what you have. So that's why they said they will have to check if you are not high risk. High risk means that you cannot pay back. They want to be sure. Employees. Who are the employees? Your workers. Who are the employees? Your workers. Why do they need? What connection do they have? They want to be sure that their effort, their productivity brings profitability. So as soon as their productivity brings profitability, the business is making profit. They want to make sure that the profit the business is making reflects in their own wages too. Stop that, please, and listen. Is it clear?
Yes, sir.
And the last one is the managers. Who are the managers?
I do not understand.
Hold on, please. Yes?
When you're explaining,
Providers, right?
No, employees.
I've not. I just want to explain it now.
Okay.
For employees, they are the workers in the business. What do they have? What connection do they have with the business? They work with the business, right? They want to be sure that when the business is making profits, their salary is also increasing. So if the business is making profit, it is based on the efforts of the workers. Yes or no? So that means their productivity has increased. As a result, the profitability of the business is increasing. So it should reflect in their salary or wages. Is it clear? Is it clear, please?
Yes.
Any questions about it?
No.